For the last couple of years, the story of AI has been all about just explosive innovation, right? Jaw-dropping new abilities, one after another. But you know what? That story is starting to change. We are moving out of the Wild West phase and into a whole new era, where the biggest questions are about governance, trust, and, you guessed it, accountability. So how do we tame this powerful new tech? Let's get into it. This quote from CPO magazine projecting into the near future just nails it. It perfectly captures the massive shift that's happening right now. You could say the honeymoon period for AI is officially over. The world is no longer just staring in wonder at what AI can do. It's starting to write the rules for what it should do. All right, so to kick things off, let's look at the big picture here. For a long time, it felt like regulators and the courts were just playing catch-up. Now, they're not just talking about AI anymore, they're starting to take real, concrete action. What we're seeing is this patchwork of laws popping up all over the world. You've got the EU's huge AI Act, which is setting a global benchmark, and then you have very specific state-level laws in places like Texas and Colorado. And here's the key thing. This isn't some simple one-size-fits-all rulebook. It's a super complex global web of compliance, and it's forcing companies to totally shift their focus from just deploying AI to actively governing. And this is where things get really interesting, because these aren't just theoretical questions for a philosophy class anymore. We've got courts trying to figure out if AI models are basically committing copyright theft on a massive scale. Regulators are cracking down hard on hiring algorithms that show bias. And that question of liability, who pays the price when an autonomous AI makes a huge mistake? That is quickly becoming one of the biggest legal challenges of our time. So, to make all this abstract legal stuff feel a little more real, let's dive into a specific case study. We're going to look at the high-stakes, high-hype world of AI trading bots. This is a place where trust, performance, and accountability are, well, everything. First off, just take a second and absorb the scale we're talking about here. The numbers are just staggering. Some of these autonomous AI agents are processing over $400 million in trading volume in a single month. That's the kind of financial responsibility we're handing over to these systems. But, and this is a huge but, here's the reality check. For all that hype, for all those ads promising automated wealth, the estimates suggest that only about 10 to 30% of people using these bots are actually making money consistently. So what is going on? What's causing this massive gap between the promise and the reality? So what exactly is an AI trading bot? Well, it's not just some simple script that buys when a line crosses another. No, we are talking about sophisticated software that uses machine learning to analyze the market and execute trades completely on its own. The whole idea, the big selling point, is that they can learn and adapt to changing conditions, which should, in theory, make them way smarter than the older, rule-based systems. Now for the twist in our story. What if many of these bots that look like absolute geniuses in simulations are really just lucky? What if they're built on a hidden flaw that makes them look brilliant on paper, but makes them dangerously fragile out in the real world? This is the million-dollar question, isn't it? Think about it like this. Imagine a student who crams for a big test just by memorizing the answers to a practice exam. They'll get a perfect score on that practice test for sure. But what happens when they face the real exam with all new questions? They're going to fail completely. Well, it turns out a lot of AI bots are doing the exact same thing with financial data. And this whole phenomenon has a name. It's called backtest overfitting. It's what happens when an AI gets so good at finding patterns in the old data it was trained on, and I'm talking about everything, including random noise and one-off flukes, that it looks like a genius. But the second it sees new live market data that doesn't have those exact same quirks, its performance just collapses. It's a false positive, and it's a huge reason for that gap we saw between the hype and the actual profits. Now, what's really cool is that researchers have figured out statistical methods to actually score this risk. This chart here shows the probability of overfitting for a couple of different AI trading models. So that SAC model, the green line, it has a 21.3% probability. That's a pretty high risk of being one of those false positives. But look at the PPO model in blue. It's way lower, at 8.0%. That suggests its performance is much more likely to be the real deal. These are just different ways of building an AI, and as you can see, the approach you choose matters a lot. And here is what happens when the rubber meets the road. This chart shows how those two bots performed during a real market crash. The overfitted SAC agent, that's the red line, it just got absolutely hammered. Its performance craters.
But the more robust PPO agent in orange did a much, much better job of protecting its capital. This just shows in really stark terms the real-world danger of that back-testing illusion.
So how do we fix this? Right? How do we get from these fragile illusions to AI that is genuinely trustworthy and reliable? Well, the good news is that developers, researchers, and business leaders are all tackling this problem head-on. For the developers who are actually building this stuff, it's all about building in safety from the very beginning. This means creating systems where you can trace every single decision the AI makes. It means installing circuit breakers that can automatically shut the bot down if losses get too big. And, maybe most importantly, it means keeping a human in the loop for the really critical, high-stakes decisions.
The researchers, meanwhile, have developed some really rigorous new ways of testing. So instead of testing a model on just one version of the past, they use these cool techniques like combinatorial cross-validation to test it on hundreds of different simulated market scenarios. This is what lets them calculate that probability of overfitting we saw earlier, and it helps them weed out the unreliable models before they ever get a chance to do any damage. And this brings us right back to the corner office. For company leaders, the focus is all on governance. It starts with something simple but so important, just knowing every single AI tool being used in your organization. From there, it's about updating contracts to make vendors liable for their AI screw-ups, and crucially, having a plan in place for when, not if, an AI system fails. So, where does all this leave us? Well, as we look to the future, it's pretty clear the story of AI is becoming less about just raw power and a lot more about building reliable systems that you can actually trust. And here's the most important point. The challenges we've just seen with trading bots, the hype, the hidden flaws like overfitting, the critical need for validation, those are not unique to trading. This story is a microcosm for the entire AI industry. The very same issues apply whether AI is being used in medicine, in law, or to hire someone for a job. And so the big takeaway is this. The future of AI won't be defined by who can build the most powerful model. It's going to be defined by who can build the most trustworthy and accountable systems around those models. As AI gets more and more powerful, the guardrails we build become just as important as the technology itself. Which leaves us with this final critical question. As these systems become truly autonomous, capable of acting on our behalf, who is ultimately responsible when things go wrong? Is it the person who turned it on, the company that built it, or are we entering a strange new legal world where the AI itself could one day be held accountable? These are the really complex questions we are just now beginning to answer.